This is Horizons Middle East and Africa. Our top stories this morning.
Fed chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell us. Kevin Hassett.
I'm not telling you.
So President Trump confirms he has picked the next Fed chair to succeed Jerome Powell, but he's not giving away the name just yet. Oil jumps after OPEC Plus sticks to its plan to pause output hikes in the first quarter of 2026 amid growing signs of a global surplus. Plus, cool running, the data center that supports CME Group bolsters its backup cooling after Friday's major outage roiled global markets. It has just gone 9 a.m. Monday morning across the Emirates. It's 4 p.m. Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how markets are tracking ahead of the opening session in the US. We've got futures pointing sharply downwards, as you might expect. Nasdaq futures in particular taking a bit of a beating, off by 1% at the moment, sort of following the pressure that we're seeing on some of the major Asian indexes at the moment. Of course, this doesn't always translate into losses at the start of trade, but in terms of the Nasdaq, particularly considering the somewhat dramatic slump we're seeing in Bitcoin at the moment, not really a good sign. Take a look at the yield on the 10-year, still parked there at 4.04 at the moment. We've got a 25 basis point cut pretty much priced in from the Fed now. And of course, as we mentioned there, Kevin Hassett now firming as the favourite for next Fed chair. We'll talk about that a bit more in a moment as well. Take a look at the oil price, a little bit of support there, 63.44 for Brent. This is after OPEC Plus sticks with its plans to pause those production increases during the first quarter. Now, there are geopolitical factors at play here as well. Take a look at this chart. We do have natural gas and defence stocks underperforming at the moment, and this as a little bit of optimism does start to build around the possibility that the Ukraine-Russia peace prospects may be improving. So some weakness there for natural gas and European defence stocks. But let's take a closer look at how markets in Asia are faring. Min Min Lo's in our Hong Kong studio. Min Min, what are you watching?
Yes, we are seeing quite a bit of weakness across Asian markets as well, largely in the red here, especially the Nikkei. We were digesting the corporate spending that came out this morning that was under expectations, below 3%. But look at the Hang Seng, it is going in the opposite direction, despite the poor PMI data that we got over the weekend, right? And today as well, the non-official PMI also contracting. The official PMI, if you flip the board, we can see that the PMI was contracting for the 8th consecutive month, and the non-official, the non-manufacturing PMI also not doing too well as well. But here we are checking the Japan 2-year yields and the bond market in general. The yields are pointing up because the BOJ governor this morning gave his clearest hint yet that the BOJ could potentially hike rates in December. Traders pricing in about a 60-odd% chance of a rate hike in December and a 90% chance or so of a hike in January. So regardless, that hike is coming, and we are seeing the 2-year yield hitting the 1% level for the first time since the 2008 financial crisis. We are also seeing the yen strengthening on the back of that. So something to keep an eye on.
All right, thank you. Min Min Lo there in Hong Kong. Well, the data center that supports the CME Group derivatives exchange says it's bolstered its backup cooling capacity, and this is after overheating sparked a 10-hour outage on Friday that roiled world markets. CyrusOne owns the facility in the suburban town of Aurora, that's about 80 kilometers away from Chicago. It says stable and secure operations have been restored, with additional redundancy added to the cooling systems. President Trump says he has decided on his pick for the next Fed chair, who he expects to deliver interest rate cuts. Sources have told Bloomberg that Trump's chief economic advisor, Kevin Hassett, is seen as the likely choice to succeed current Fed chief Jerome Powell. Hassett says markets are ready for Trump to make his decision by the end of the year. However, the man himself declined to say whether he sees himself as the front runner to succeed Powell.
We had a great Treasury auction, interest rates went down. And so I think that the American people could expect President Trump to pick somebody who's going to help them, have cheaper car loans and easier access to mortgages at lower rates. And that's what we saw in the market response.
Joining us now is Haig Bathgate, CEO of Callanish Capital. Haig, I just want to address that question right out of the gate. I mean, Trump says he's made his choice, but he's not saying who it is. But bets are now firming that it is Kevin Hassett. Who do you think it is going to be? But perhaps more critically, are they going to operate independently?
Yeah, well, I think it's almost certainly going to be Hassett, isn't it? I mean, it's one of the worst kept secrets that we've seen in this stuff. But yeah, I think anybody who's going to be selected by Trump is going to be expected to follow the party line. So yeah, I think it's going to be probably a less independent Fed than we've seen in the past. So it'll be interesting to see how the markets digest that.
So in terms of the next Fed meeting, it's just a few days away now. It seems like 25 basis point reduction is nailed on. I'm just wondering if that's your pick. And then once we do get a next Fed chair, where do you see rates heading in the US in 2026?
Yeah, well, this is always the sort of dichotomy, wasn't it? The markets have been pricing in quite a few cuts next year as well. So that always looked overly ambitious unless you had this sort of replace in Fed chair. So I think the markets, it's incredibly, it's incredible how good they are at pricing these sorts of things in. But yeah, I think it does seem that they're going to probably be looking at the dual mandate of employment more than inflation, because if inflation holds up, the only reason they'll have to reduce rates, other than political pressure, is the overall employment rate.
I just want to return to that political pressure question because, of course, Jay Powell was a Trump appointee as well and has, steadfastly not done as he was told. Do you feel that once Kevin Hassett, if it is him, gets his feet under the desk and feels the weight of the institution upon him, that he might preserve Fed independence?
Yeah, look, it's a very difficult position to take if you're not going to toe the party line, and you can see how Powell's sort of fallen out of favour quite significantly. It's almost become a kind of a standoff. So I think before anybody would take that job on, they would think very carefully before resisting too much. Again, the markets are already pointing to these cuts, so I don't think it is too overly contentious. As you say, the internal workings of the Fed might make it a little bit more problematic than they might first appear to be the case, but I think that the direction of travel, and certainly the market is pricing in quite a few rate cuts now.
Yeah, it is a fair point. The direction of travel is pointing the US on an easing trajectory. And at the same time, we've got most other developed central banks either on hold or, in the case of Japan, looking at tightening. So with that in mind, where are you positioning at the moment?
Yeah, so we're just generally avoiding Western government bond markets. We think there's a lot of risk in there, and there's not a huge amount of upside. So I think you've got all sorts of issues around overall debt levels, and I think that the tail risk here with the Fed is if they're seen to be too accommodative, then that could lead to some sort of crisis in the US bond market or the US dollar more widely. And I think a lot of the strength that we've seen in areas like the gold price and precious metals are coming on the back of dollar debasement effectively. So I think it's an area that we are not we don't see a lot of value there. If anything, I do think the trajectory is for rate decreases, but on the longer dated bonds, I would be quite concerned just about the impact of political interference and when the bond markets and bond market investors might start taking that a bit more seriously.
So you're staying away from that area. What appeals to you at the moment? And I want to go fishing here and ask you if perhaps it's tech, and if today we're setting up for a bit of a beating for the NASDAQ, would you view that as a buying opportunity?
Yeah, I think so. I mean, it's a sort of, it's quite long in the tooth trade, but we see probably more value in areas like tech just now, particularly if we see a bit more sustained sell-off. That would give us a reason to go back in. These companies, particularly the mega cap companies in the US, are protected monopolies at the moment. It's the first time we can look back in history and we can see that governments, instead of intervening to split these sort of monopolistic type arrangements up, they're actually protecting them because they're strategically too important. So we see that continuing to be the best trade in town. If anything, we see some sort of filter through to mid and small caps as we start to see the adoption of these technologies in an everyday environment sense. But yeah, it's still, we see value. We're kind of expecting, we're seeing liquidity dry up. Obviously, we had bad liquidity when we had the US government shutdown, and liquidity at this time of year is notoriously quite poor. So we're seeing a bit of consolidation. We don't see some of the sell-offs that we've seen to be overly concerning in our view.
Haig, before we let you go, I'd just like to get your view on China as well, because we've just seen our 8th consecutive PMI out of China below a reading of 50. The rating dog PMI today was also a miss. So with that in mind, are you anticipating maybe some stimulus in 2026?
Yeah, I think so. Look, China's the one area that we've got wrong. We were moving into there quite preemptively earlier this year. We thought that some of the concerns over exports and trade tariffs had been overdone, but yeah, it's a very difficult area, and it continues to be problematic. There's many times I think that people have been sucked into the China trade over the last couple of years, and we've been proven wrong each and every time. So I would expect more stimulus, but again, I suppose the authorities in China, unlike the US, are not thinking about the next political cycle. They're thinking about what's right for the next 15 to 20 years. So there's not that sense of urgency to stimulate every time there's some weakness in markets.
All right, Haig, thanks very much for your views. That is Haig Bathgate, Callanish Capital CEO. Still to come this hour, we will discuss OPEC Plus plans to stick to its output pause next year with Carole Nakhle of Crystol Energy. Stay with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. US Secretary of State Marco Rubio said he held productive talks with Ukrainian negotiators about a framework for a peace deal, but there was no final breakthrough as President Donald Trump continues to push for a truce with Russia.
It's not just about the terms that ends fighting. It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate, it's complicated, there are a lot of moving parts, and obviously there's another party involved here that'll have to be a part of the equation, and that'll continue later this week when Mr. Witkoff travels to Moscow.
Well, the meeting took place in Florida with U.S. Special Envoy Steve Witkoff and Trump's son-in-law, Jared Kushner, also in attendance. It was likely the last chance for Ukraine's negotiators to sway Witkoff before he leads a U.S. delegation for talks in Russia this week. Joining us now from Dubai is Bloomberg's Russia economy and government editor, Greg Sullivan. So, Greg, can you shed a little bit more light on what's going to happen next?
Yes. Well, as you said, Ukrainian and U.S. negotiators met yesterday in Florida and cast the discussions as productive and positive. The lead Ukrainian negotiator said the U.S. was very supportive, though U.S. Secretary of State Marco Rubio did say it was a difficult and sensitive process. We know that Steve Witkoff, who is in that meeting, is scheduled to go to Moscow this week, and he's likely to meet with President Putin. Putin last week confirmed that a delegation is expected, and so those talks will continue. As you said, this was probably the last chance for Ukraine to put their case to Witkoff. There's been several meetings going on around Trump's proposals for a peace plan, which were developed with the Russians, between Witkoff and the Russians. An initial draft of that caused a lot of concern in Kyiv and Europe that it was tilted too favorably towards Moscow. So this was a very important meeting ahead of this week's diplomatic activity.
And after Witkoff's visit, Putin is expected to travel to India. So what's he going to be doing there, and what's expected from that visit?
Yes, it's a pretty symbolic visit. It will be Putin's first visit to India since the start of the war. India and Russia have maintained a pretty significant relationship despite the war, despite Modi's own concerns about Russia's war. India has increased its purchases of Russian oil. That, of course, caused consternation in Washington. U.S. President Donald Trump has put punitive tariffs onto India, in part because of those Russian oil purchases. But In addition to energy, we're likely to see trade and defense purchases on the agenda. We know that India does plan to start discussions over purchases of fighter jets and defense missile shields. Those weapons purchases in the past, Washington has pushed back on, and so that's likely to also cause some consternation in Washington. But it's all part of Modi's balancing act, trying to deepen ties with the U.S. or at least keep ties from deteriorating further, while also maintaining this relationship with Russia.
That's Bloomberg's Russia economy and government editor Greg Sullivan there. Thank you. Now for a look at some of the other stories that we're following. President Trump is downplaying his social media post that called on airlines to consider Venezuelan airspace closed. US forces have been massing in the region as Trump weighs military action that would go beyond strikes on suspected drug boats. Venezuela's government called Trump's remarks hostile and demanded unrestricted respect for its airspace.
We consider Venezuela to be not a very friendly country. They sent millions of people, really, and probably a number in excess of that. And a lot of those people shouldn't be in our country, from jails, from gangs, from drug dealers, from all of the people that came into our country shouldn't have been in our country, causing a lot of problems.
Does your warning
and drugs.
Does your warning mean that an airstrike is imminent, or should we not read it that way?
Don't read anything into it.
Indonesia's National Disaster Agency says heavy rain and flooding in several provinces has killed more than 300 people. Another 279 people were listed as missing, while more than 126,000 have been displaced. With major roads and bridges cut in some districts of Aceh and Sumatra, authorities are relying on helicopters and light aircraft to deliver aid. Coming up, Rwandan President Paul Kagame has accused the Democratic Republic of Congo of not sticking to its commitments under US and Qatar-based peace agreements. We'll discuss the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Several Barrick mining employees detained in Mali for more than a year now have been released. Their release was part of an agreement reached between the company and Mali's military leadership, ending a 2-year dispute that shuttered one of Barrick's most important gold operations. Under the deal, Mali will release the employees and halt all criminal proceedings against them, plus lift arrest warrants against Barrick's CEO and general manager. Barrick earlier agreed to pay a total of $431 million to clear long-running fiscal and customs disputes. First half profits have climbed 36% at South Africa's state-owned power utility, Eskom. Profit increased to 24.3 billion rand in the 6 months through September 30, compared with 17.8 billion rand in the same period last year. The leap in profits comes as the company increased the reliability of its plants by making overdue repairs and ended years of frequent power cuts that crimped economic growth. Rwandan President Paul Kagame said the Democratic Republic of Congo isn't sticking to its commitments under US and Qatar-based backed peace agreements, which is in prolonging conflict with its eastern region. Rwanda-backed M23 rebels have occupied the 2 biggest cities in eastern Congo since the beginning of the year, causing massive displacement and a growing humanitarian crisis. Congolese officials have been shuttling between Doha and Washington for months of talks with their counterparts from Rwanda, which denies backing the rebels, and from the M23 to resolve the conflict. For more, Bloomberg's Ondero Oganga joins us now from Kigali, Rwanda. So, Ondero, how close are both parties to closing a peace deal and activating those economic perks that would come with it?
Good morning, Paul. So close, yet so far away. The last time the 2 delegations met in Washington, it looked like there was optimism that they could actually close this deal and get it to the finish line. However, just a few hours later, the rug was pulled under Rwanda's feet. DRC officials came back saying they were not going to sign the deal for a couple of reasons. They felt like Rwanda had not made any concessions throughout this peace negotiation process. First of all, they claim that Rwanda has not acknowledged that they're supporting M23. And second, Rwanda has also not acknowledged that that they have troops inside the eastern part of DRC. Instead, Rwanda maintains that they are holding a defensive posture. And for this reason, we saw DRC backtracking and saying, until you can make some concessions, we're not going to be the only one to have something to give. That's one of the pain points. Another touchy issue is minerals. Rwanda's gold exports are on track to increase fivefold to what they were in 2021. IMF projects that earnings from gold could hit $2 billion by the end of this year. And this is going to account for half of the export value that comes from Rwanda. Then DRC comes in and says, but does Rwanda have this amount of gold? Instead, they're claiming that Rwanda is smuggling minerals out of the eastern part of DRC and then laundering it into the global ecosystem. And that's why we're seeing all this money coming into Rwanda. And at the beginning of the year, when the conflict intensified, then we saw the international community, including the EU, impose sanctions on Rwanda's gold smelter, Gasabo, and some of its executives. But when I spoke to President Paul Kagame during a press conference with journalists, he told me that there's no freeze, there's no ban. Minerals are still being sold to EU, US, and the Gulf states. And this brings a bigger conversation where President Paul Kagame is not shy of trading punches. In fact, he was pointing a finger of blame at Europe, saying they don't have a moral high ground to lecture Rwanda or even sanction them. He pointed to the diamond district in Belgium, saying this is a country that does not necessarily have diamonds. And so Rwanda maintains that they have their minerals. I've been to the cobalt mines. The executives there say the demand is still trickling in. And so as both leaders are gearing to go to Washington to sign this deal at the beginning of this month, they're reading from a different script. They're pulling in different directions. And even though the U.S. has the levers to apply political, diplomatic, and economic pressure, it's just enough maybe to get this deal across the line, but a lot more needs to be done to ensure it holds water.
Ondira, let's hear a little bit more from that press conference you just mentioned.
There's nothing frozen. You know what they sanctioned? They are individuals who led that refinery. But the refinery operates, right?
So that I don't misquote you, Rwanda is still selling its gold to the EU.
It's selling gold to the market. Whether EU, the Gulf region, or United States. I don't know whether I'm getting your question properly, but there is definitely gold.
There seems to be some confusion there over what's being sanctioned and what isn't. What more did he tell us, Ondira?
I think the position on Rwanda is very clear. They're not backing down on their position. They've always maintained that for as long as peace and security and stability of Rwanda is in question, they're going to do everything that they can to protect the sovereignty of their country. They've also maintained that they have their own minerals and they're not smuggling minerals out of DRC. And this is a country that has previously been sanctioned. They're not afraid of sanctions.
All right, Ondira Oganga in Kigali, Rwanda there. More to come. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning.
Are you Fed chair? Are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell me, Kevin Hassett.
I'm not telling you.
So President Trump confirming he has picked the next Fed chair to succeed Jerome Powell. He's not giving us any names yet. The market thinks it's Kevin Hassett, though. Oil jumps after OPEC Plus sticks to its plan to pause output hikes in the first quarter of 2026. And that's amid growing signs of a global surplus. Plus, cool running. The data center that supports CME Group bolsters its backup cooling, and that's after Friday's major outage roiled global markets. It has just gone 9:30 a.m. Monday morning across the Emirates. It's 4:30 p.m. Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how some of the key assets that we're tracking are performing at the moment. We're seeing the picture continuing to soften for US futures. We've got S&P E-minis off by about 0.8% now. The picture just keeps growing darker for NASDAQ futures as well. Of course, this doesn't always mean you're going to see selling at the open, but in the case of the NASDAQ, the beating that Bitcoin has been taking over the past 24 hours or so suggests that we might see a little bit of risk off when we get get going there. 10-year yield holding pretty firm. As mentioned, the market has decided that Kevin Hassett is the next Fed chair. No official announcement from President Trump yet, however. The expectation is that we've got a rate cut coming in about a week's time from the Fed. Pretty much swaps market fully pricing in 25 basis points worth of cuts. A little bit of support there for crude prices, 63.53 a barrel for Brent at the moment. This is after OPEC Plus decided to stick with its plans to pause production increases during the first quarter. Now, a little bit more on energy prices as well, and defence stocks also. We see both of those underperforming, natural gas and defence stocks a little bit weaker. This is as there are signs of progress in terms of peace talks between Ukraine and Russia. The Ukrainian President Volodymyr Zelensky sounding quite optimistic, telling his country, quote, "In the coming days, it is feasible to flesh out the steps to determine how to bring the war to a dignified end." And we have Steve Witkoff shortly on his way to Russia to talk to the Russian side as well. Well, let's zoom in on how markets in Asia are faring. Min Min Lo's in our Hong Kong studio. Min Min.
Hey, Paul. Yes, investors in Asia largely quite cautious today as we await the U.S. macro data this week. But we are digesting the PMI data out of China over the weekend. And you can see everything is in contraction, including the official PMI as well as the rating dog private manufacturing PMI as well. The manufacturing PMI, I should mention, is at 49.2. And this is the 8th straight month of contraction, the longest slump we have seen in factory activity. The non-manufacturing PMI contracting as well for the first time since COVID reopening. So overall, not boding very well for the end of the year for China. But despite that, though, we are seeing the CSI 300, the HSI both doing fairly well today. So it seems like perhaps traders are seeing this as a positive sign for perhaps more government stimulus. But flip the board, we are digesting what came out of the commentary from Ueda today, the BOJ governor, signaling, giving the strongest signal yet so far of a potential rate hike, perhaps in December. Traders pricing in about a 60% chance of a rate hike then, and you can see big moves across the markets. You have the yen strengthening about 0.4% now, moving closer to the 155 level. The 2-year yield hitting above 1% for the first time since 2008 during the financial crisis. The Nikkei and the Topics are both seeing big declines here. The only sector that is doing really well, though, is the Topics Banks Index, because obviously they always like growing interest rates.
All right, Min Min Lo in Hong Kong there. Thank you. Well, oil is trading higher today. This is after OPEC Plus confirmed it is going to stick with plans to pause production hikes during the first quarter of 2026. The alliance reiterating that the move is a reflection of weaker seasonal market conditions. A review of members' individual output capacity has also been approved, and that will help set quotas in 2027. For more there, Carole Nakhle, Crystol Energy CEO, joins us now from London. Carole, thanks so much for joining us today. I just want to start off on that commitment to stick with that production increase pause. Do you feel that's going to be enough to put a floor under oil prices now?
Well, it's definitely a wise move because as we head towards the end of the year and there is a weakening in seasonal demand, as well as a broader uncertainty about the geopolitics, which is, I would say, the main wild card today in oil markets. Everybody's watching what's going to happen in Ukraine, what's going to happen in Venezuela and elsewhere. So I think it's a wise move from OPEC to wait and see what's going to happen. And of course, it's helping to keep a floor on prices rather than flooding a market which is already well supplied. But that also reflects a concern, perhaps not a direct concern, because organization OPEC Plus is not that concerned about a supply glut unless most market observers. But there is some kind of concern that there could be too much supply in the market. And if we put more barrels in the market, that would exercise further downward pressure on prices. And this is not something that producers would like to see. But definitely it's a factor in keeping a floor, but there's also the geopolitics as well as the China factor, which are playing a role in this kind of flooring for oil prices for next year.
Well, let's unpack a couple of those wildcards. I want to start with the geopolitics and in terms of the Russia-Ukraine war. How optimistic are you? Do you see this crisis getting resolved in the coming weeks or perhaps months? And if we do see sanctions lifted on Russia, what are the supply implications?
Well, there is, on one hand, there is, our hope that, of course, everybody would like to see, maybe not everybody, but most of us would like to see this war ending. But let me keep it maybe close to the market realities and leave the politics on the side, because that is by itself a very complicated scene. But in terms of impact on energy markets, on oil market in particular, but there's also the impact on gas markets. But when it comes to oil, I think that would lift a little bit, and that would actually ease the geopolitical risk premium, which is still there in the market today. I don't think we're going to see a sudden flood of oil in the market because Russian oil never left the market. It has been simply redirected. So we should not expect to see an additional sudden big flow of oil trade. However, we're going to see lower risk premium. We're going to see, because of there is less uncertainty about where Russian gas is going to go, about the dark fleet, about the sanctions, but also less attacks on the energy infrastructure on both sides of the equation, on the Russian side and the Ukrainian side. That said, I don't think sanctions can be lifted immediately overnight. It's a little bit more complicated, and that by itself is going to be a rather slower process. But on balance, it is positive news for global consumers when it comes to having a peace deal in one of the most important regions for oil trade in terms of consumption and exports as well.
Well, as that risk appears to be receding, notwithstanding all the variables attached to it, we do have another risk growing, and that is off the coast of Venezuela, where there is a US carrier group now. How do you see this playing out? Do you feel conflict is inevitable, or do you think both sides could back away from that?
I don't think anyone would like to see an additional conflict, a major conflict opening up, but definitely it is a measured escalation in the situation in the Americas, and that will have, again, an impact not only on oil markets, but on the global economy. That said, if we limit it to oil markets, and when we look at Venezuela, I think Venezuelan oil industry has had its heydays, not just before the sanctions, but I would say maybe in the 90s and the 80s, and things changed dramatically in Venezuela with a change of political scene. We have seen how investment declined sharply, and today Venezuela is producing a fraction of what used to produce not long ago. Now, if there is an escalation that will remove further oil from the market, though we have to be careful because oil will always find a way in the market, always find an opening to get to certain customers disguised under other labeling or blended with other molecules, as we have seen with the Iranian oil, with the Russian oil. But it will constrain Venezuela's export capacity further. However, if there is, again, a resolution of the conflict there, it's unlikely that we see the market flooded because there is no production capacity to expand on. Venezuela is in dire need of investment, and that will take a long time before investment translates into higher production.
Well, let's bring it back to OPEC Plus then. Do you have in mind like a threshold for 2026, at which point OPEC Plus might feel compelled to cut production again?
Well, my guess is as good as yours, but in general, we can see, first of all, perhaps I would like to frame your question differently, whether we're going to see further pause, a longer pause for price hikes, or we're going to see more barrels put in the market, because we're talking only about the first quarter of the year in terms of pause. And I think that is the main question we should ask ourselves. However, if the current bearish sentiment, which kind of prevails, most of the analysis I have come across to, I saw some established financial institutions talking about the possibility or a scenario of oil prices, Brent, heading even to $40 a barrel. I don't think in such a very gloomy price scenario, OPEC Plus is going to wait and see. I think they might intervene in order to put upward pressure on prices. But at the moment, from where OPEC is sitting, I would say the big question is whether to extend the pause for the second quarter of the year, or even there would be room for more barrels, assuming the geopolitical situation with the main producers in this world gets worse, not resolved, and if China continues with its ongoing buying for oil to build its inventories, whether commercial or strategic.
All right, Carole Nakhle, Crystol Energy CEO, thanks so much for joining us with your analysis. Well, the F2 Priority Asia 2025 Summit is taking place in Tokyo, bringing together key leaders and policymakers from Saudi Arabia and Japan. Rishi Kapoor, Vice Chairman and CIO at Investcorp, told Bloomberg's Avril Hong that private markets are supporting strong growth between multiple regions.
what we are clearly seeing from our vantage point as a global private markets focused investment firm at Investcorp is the emergence of this corridor, if I may call it that, of capital flow, trade flow, and investment flow between Japan and the Middle East, routing itself through and via India in particular, but ASEAN broadly speaking. And that corridor of bidirectional trade and capital and investment flow is really what is very interesting for firms like ours to tap into, because for the first time, it's, like I said, it's bidirectional. And more importantly, it's also opening up a world of opportunity for us to deploy capital behind in areas and sectors of high conviction and potentially high return in the future.
Rishi, is this flow through the corridors that you speak of going to be agnostic of the BOJ's path? Do investors need to see hike for more conviction?
I think that's a great question. And to be honest, I think the BOJ's path is actually one of the underpinnings for this corridor to emerge and cement itself the way I described it. Because for the longest of times, for many decades, the growth trajectory for Japan in general was relatively muted in terms of nominal GDP. And with the emergence of some degree of acceptable normalized inflation in the Japanese economy, whilst a continuing relatively low interest rate environment behind it means that the prospect for strong, attractive returns for equity investors in private markets, but also arguably in public markets, are very strong over a medium to long-term horizon. And that's really what is giving rise to that increasing investor interest. That is, of course, supplemented beyond what the BOJ does by the emergence of a large set of opportunities within certain sectors, many of them related to technology and innovation, but also related to energy transition and infrastructure, both digital and physical, that support this increase in interest for capital flows between the Middle East and Japan. And I think last but not least, the work that the BOJ is doing in terms of enhancing governance in particular and regulatory reform is an important pillar of how we see this market evolving.
That was Rishi Kapoor, Vice Chairman and CIO at Investcorp, speaking there to Bloomberg's Avril Hong. Well, our Asia trade anchor Sherian is moderating a panel at the FII Priority Asia 2025 Summit. She's joined by the JPX Group CEO and Saudi Exchange CEO. Let's take a listen.
Connectivity to the Saudi markets, how important is this at a time when you're also seeing your own foreign inflows?
Definitely. I mean, if you look at our market 10 years ago, it was regional, probably local. And as of today, we are the fastest growing exchange in the world, literally. We hold the crown. For 2024, it's the largest exchange in terms of growth, number of listed companies. What we have done is different reforms. On the exchange level, for example, we've created the CCP, clearing counterparty, and we have changed our settlement cycle from, fun fact, we used to have T+0, but we need to slow down T+2 because familiarity is important for the largest investors. We've created a new market for small companies, made the listing easier, and we had an ambition to be a top 10 exchange in the world. And we did the Aramco IPO, which still holds the record as the largest IPO in the history. But you cannot rely on one great story like Aramco. So because of the regulations and because of what's going on, the biggest transformational program in the history, the Vision 2030, many things have changed positively to the way that everyone would like a country to be. And for example, the private sector has been growing very fast, even greater than other G20, most of the G20 peers. The non-oil revenue have increased and exceeded 50%. So we are on the way to reach our targets. And because of the business friendliness opening up the market and limiting the friction that the foreign investor used to face when they want to invest in our market. Now we are on top 5 every year in terms of IPOs or IPO proceeds. And also the foreign investments have grown from less than $500 million when we started the QFI program, and now it's almost $100 billion US. And if you know that you can only access the market through QFI or through I would say, easy way like the swap. And so there is a big room for us to grow even more. And this is where the ETF comes in place. Yes, we had an arrangement back in 2017 when we were looking at the biggest markets in the world, and Japan is definitely one of the biggest, and you look after and how they are building their market along with the leading markets in the world. And led by the PIF, the activity of having ETFs to have exposure on the Saudi market, where they listed last year in Japan and before that in other Asian markets, that feeded the market with more foreign inflows. And what we're doing is we'll be listing an ETF or Japanese securities in our market. And this is kind of relationship we're building with the other financial centers, especially with the Asian market. What we're trying to build is not to look at Saudi as a tactical trade. No, it's a generational opportunity. Something that you want to build and to be part of a country that its economy is booming. I mean, you look at all the numbers. Inflation is good levels, historical low employment, high purchasing power, high PMI, a lot of natural resources, and also we're opening up for different sectors, tourism, entertainment, and many things. And we have a visionary leader.
Coming up, European ministers step up cooperation to tackle the growing threat from a so-called hybrid war. That story up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. A group of European defence ministers has vowed to step up cooperation on countering hybrid threats, including from drones, cyber attacks and disinformation. Disruption from unmanned aerial vehicles is becoming a near daily occurrence across the continent. Bloomberg's Chief Europe correspondent Oliver Crook joins us now with more. So, Oliver, how serious do ministers think these hybrid threats are?
There are competing views within the European community about how serious the attacks are. I mean, there's a degree to which it is sort of undeniable. It has had a massive impact on a number of different nations in terms of airspace. We've seen it in Belgium, where I'm located, as well as in Copenhagen and a number of other countries, particularly on the eastern flank of Europe, where they've had to basically close airspace, not just because of drones, but because of balloons that have been floated over from Belarus, for example. And this is something that the Europeans have had some difficulty in managing, particularly a few months ago when we were seeing those undersea cables being cut very, very regularly. They had some success there by deploying the sort of Baltic, a number of ships within the Baltic to sort of patrol in order to cut down on those occurrences. We haven't had those, but don't forget, about 2 weeks ago, we had a rail line sabotage explosion within Poland that basically the Polish government said was something that the Russians had calculated. This was a key supply line into Ukraine, but there's a lot of question about how to ramp up those sort of defenses without sort of escalating the situation. That is sort of the balance that we've seen so often here for the Europeans, wanting to ratchet up a little bit some of the pressure on the Russians without escalating the situation further. And that'll be front and center before the defense ministers as they assemble here within Brussels. We should say that that is also a meeting that is in attendance will be the Ukrainian defense minister, Denis Shmyhal, who is obviously in that key week for negotiations between the United States, between the Ukrainians, and between the Russians.
Yeah, let's talk a little bit more about those peace talks continuing. What's Europe saying in terms of reiterating its support for Ukraine?
Well, the Europeans have been sort of, offering a lot of words. That has been basically their main sort of contribution to the negotiations over the last 10 days, and that, as you can imagine, will not take things terribly far. Most of the action over the weekend was between the Secretary of State, Marco Rubio, and the delegation of the Ukrainians. Those conversations wrapped up yesterday. In Florida, the action this week will shift. Today, we have Zelensky will be in Paris. He'll be meeting with Emmanuel Macron to discuss the sort of European-Ukrainian alignment on those sort of discussions with the United States. We expect Steve Witkoff to head to Russia this week. We've heard some reports that he might be leaving as early as today. And of course, we also have later this week on Wednesday, Marco Rubio will be here in Brussels to meet with the NATO defense ministers and foreign ministers to have conversations, again, trying to imagine what the future will look like for the security guarantees of Ukraine. We should say we have not seen the plan ever since it got a sort of makeover from that initial 28-point plan that was put forward, that was seen by the European community as very skewed towards the Russians. So we don't know exactly about that 19-point living document, what it looks like today. There are the key issues of territory, there are the key issues of security guarantees, and those are going to be the most difficult ones to overcome, and those are the ones that the Trump administration are very keen to resolve. The initial deadline was last Thursday into this week. This could be an absolutely crucial week for the Ukrainians as they sort of try to negotiate their fate.
All right, Bloomberg's chief Europe correspondent Oliver Crook, thank you. Well, airlines across the world have been racing to keep their fleets operating after being forced to carry out an urgent software update on one of Airbus's most widely flown aircraft. The company revealed the fault on its A320 risked corrupting computer data that helps maintain flight controls. Bloomberg's Rachel Chang is in Hong Kong. So, Rachel, it appears that fault's being corrected with a lot less disruption than was anticipated.
Right. Originally, when Airbus issued this statement late Friday night Asia time, there was a lot of shock and chaos because the regulators essentially said all aircraft would have to fix this problem before their next scheduled flight. So you can imagine that there were a lot of flights that were about to take off, essentially, hundreds, thousands of people getting their flights cancelled and delayed. So over the weekend, it was quite chaotic. But thankfully, for the vast majority of these affected jets, it was only a software upgrade that required about 2 to 3 hours. There are about 1,000 jets that we know do need older jets that do need a complete hardware upgrade. That would take a little bit longer. But overall, yes, I think it is very much a sigh of relief kind of coming. This happened, essentially out of that U.S. Thanksgiving holiday, and the industry is coming into really its busiest 4 weeks. So there is a big sigh of relief that it's not worse than this.
You're busy also in terms of Airbus trying to meet some pretty ambitious delivery targets. Are there any implications for the company from this?
Right. I mean, the entire incident really just sort of underscores, really how reliant the aviation industry really is on these two companies. A lot of the big crises of the past couple of years have really focused on Boeing and not Airbus. So, this is really a reminder that these jets really have so many thousands of unknowns, really, and that the companies themselves are still coming to terms with a lot of it. For example, the issue that Airbus flagged here, that intense solar radiation or cosmic radiation is what they call it, could corrupt some of the software that's used to maintain flight controls. Very little is understood about that. What is that radiation? How do we tell that it's not affecting other parts of the very complex systems that these passenger aircraft run on? So for Airbus, really, it's a sigh of relief that it's not worse and that they caught it in time. But also, I think the months and years ahead will be devoted to trying to figure this out.
All right, Bloomberg's Rachel Chang, thank you. And that is it for Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us for Daybreak Europe. This is Bloomberg.